You are paying a tax bill right now that the law says you may not have to pay, and the worst part is nobody told you that. You have been sending that check every single year, thinking it was just the price of owning your home, and the government has been cashing it without a single word. Right now, in 2026, there are millions of seniors across this country who qualify for property tax exemptions and relief programs that could save them anywhere from a few $100s to several $1,000s every single year. And the vast majority of them have never claimed a single dollar of that relief. Not because the programs do not exist, not because they do not qualify, but simply because nobody ever sat down and explained how this works. That is exactly what we are doing today. I want to spend the next few minutes walking you through what these programs actually are, why so many seniors miss them, and what 4 specific forms and actions you need to take before June 10th to make sure you are not the person who pays full price while your neighbor pays nothing. Let me start with a number that floored me when I came across it. In Texas alone, over 1.1 million seniors are currently at risk of missing a school tax exemption that could freeze or dramatically cut their property taxes just because they have not filed the paperwork. Think about that number for a second. 1.1 million people in one state. And Texas is not unique. Every state in this country has programs sitting on the books right now, going unclaimed by the people they were designed to help. So why does this happen? Why are so many seniors overpaying year after year? And the answer honestly is a combination of things that compound on each other. The first reason is that nobody tells you when you qualify. Most county assessor offices do not send you a letter on your 65th birthday saying, "Congratulations, here are 5 programs you now qualify for." They do not call you, they do not follow up. The burden is entirely on you to know these programs exist, to find the right form, and to submit it before the deadline. The second reason is the assumption that it happens automatically. A lot of seniors I talk to genuinely believe that when they turn 65, their property tax is adjusted on their own. They think the government has their birthday on file and just handles it. That is not how it works, not in a single state in America. Most senior exemptions are not automatic. You must file an application in the year you first qualify, and if you miss the window, you forfeit the exemption for that full tax year with no retroactive recovery in many states. The third reason is that deadlines are scattered and confusing. Different programs in different counties have different cutoff dates, and if you miss one, you are locked out until next year. Some deadlines have already passed for 2026 in certain states. Others are coming up in the next few days. And that is why this video matters right now. So, let me walk you through the 4 types of programs and the forms associated with them that you need to act on immediately. The first is the homestead exemption, and this is the foundational program that every senior homeowner should have locked in before anything else. A homestead exemption reduces the assessed taxable value of your home, which directly reduces what you owe. In Texas, you file Form 5-0-114. Which is the application for residents' homestead exemption, and it is filed with your local county appraisal district, not with the IRS. For Texas seniors, the over 65 property tax exemption can dramatically reduce school district property taxes, and in many counties also freezes school taxes at the amount you paid when you first qualified, meaning your taxes will not rise even if your home value increases. In North Carolina, you file Form AV9, and the deadline is June 1st. Preceding the tax year for which the exclusion is claimed, so that means June 1st, 2026, for the 2026 tax year. In Michigan, you file Form L4013, and the deadline is June 1st for the exemption to apply to the summer tax bill. These are not the same form everywhere, but the action is the same everywhere. File it before your state deadline, or you lose a full year of savings. The second program is the senior assessment freeze, and this one is particularly powerful because it does not just reduce what you owe. Today it locks your home's taxable value so that it cannot keep climbing with the market. The senior assessment freeze helps eligible seniors stabilize their property taxes by freezing the equalized assessed value of their home, preventing increases due to reassessment. In Illinois, for example, the income limit was recently raised under new legislation signed by the governor, and the application must be submitted annually, meaning if you received this benefit last year, you still need to refile this year. The form needs to be back in the Winnebago County Supervisor of Assessment's office no later than July 1st, 2026, and in Cook County, the application deadline was May 15th of this year. In New Jersey, the Senior Freeze program requires you to file either a PTR1 or a PTR2 form each year. And even if your freeze was approved last year, you are required to recertify annually to keep it. This is the one that trips people up the most, because they think once you are approved, you are done. But in many states, you have to prove your eligibility again every single year. The third category is income-based relief, and this is where seniors with more modest fixed incomes can see some of the biggest savings. In New York, the senior citizens homeowners exemption can reduce assessed value for county town and school tax by up to 50%. For seniors 65 and older with income under approximately $58,399, and the Enhanced STAR program, which further reduces school taxes, has an income limit of $98,700 for 2026. Combined, these two programs can cut a New York senior's total property tax bill by more than half, and yet thousands of eligible homeowners in that state have never filed the application. In Massachusetts, seniors 65 and older, whose property taxes exceed 10% of their income, can claim a refundable state income tax credit of up to $2,730 filed on Schedule CB of Form 1 on their state return. And under new legislation signed by Governor Hochul, localities in New York now have the option to offer eligible senior homeowners a property tax exemption of up to 65% of their home's assessed value, up from the previous maximum of 50% effective for taxable years, beginning January 1st, 2026. These numbers are real, and they are available right now to people who file. The fourth thing you need to look at, and this is the one that almost nobody talks about, is a formal appeal of your property assessment. This is separate from any exemption program. Your home has an assessed value set by your county, and that value may simply be wrong. It may be higher than what your home is actually worth right now. If it is, you are overpaying on a bad number, and there is a formal appeals process to challenge it. The deadline to contest the assessed value of your home is usually 30 to 60 days after you receive the annual assessment notice, and it runs on a completely different clock from the exemption deadlines. If you received an assessment notice recently, that clock may already be ticking. Here's the moment I want you to really sit with. None of these programs come to you. You have to go to them. Every single one of the programs I just described requires you to file a form by a specific date, and the government is not going to chase you down if you miss it. They will simply continue billing you the full amount indefinitely. And if you miss the window in most states, you cannot go back and recover what you overpaid for that year. It is gone. The difference between someone who files and someone who does not is not income. It is not wealth, it is just information. And the people writing those property tax bills are counting on the fact that most people do not have it. Here is the bottom line on everything we covered today. You may be legally entitled to pay far less in property taxes than you are currently paying. The programs exist in every single state. They cover homestead exemptions, assessment, freezes, income-based credits, and assessment appeals. But every single one of them requires you to take action before a deadline. And several of those deadlines fall in the next few days around June 10th of this year. Knowing your local rules is not optional anymore. It is the difference between hundreds or thousands of dollars in your pocket or in the county's. Here is exactly what I want you to do. Today, not tomorrow, today go to your county assessor's website or your state's Department of Revenue website and search for senior property tax exemptions. Type in your state and the words senior homestead exemption or senior freeze and see what comes up. If you are in North Carolina, that deadline is June 1st. In Michigan, it is June 1st. In Cook County, Illinois, it was May 15th, but you may still be able to file a certificate of error. If you are unsure, call a local tax professional or your county assessor's office directly. They are required to answer your questions, and I want to hear from you in the comments below. Are you already claiming one of these exemptions? Did you just find out you were missing one? Tell me your state and what you discovered, because your comment might be the thing that helps someone else in the exact same situation. Subscribe if you are not already subscribed, because every week I put out a video exactly like this. One plain language, no products, no sales pitch, just the rules that directly affect your money and your retirement, Right now, you know something that most of your neighbors still do: not use it.